Hi and welcome to Swissquote's Daily Market Talk. It's Monday, November 10th, and the new week starts on optimism that the US government shutdown could finally end and let the US data hit the wire again to give investors some clarity about what the Fed should do next. But not only, because on Saturday, Nvidia's CEO Jensen Huang asked TSMC to supply more chips to them to meet the strong AI demand. So it's quite needless to say that Asian technology stocks are breathing a sigh of relief this morning. And we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. Now, things are looking much better this morning because last week was a tough one, remember? It was marked by a cocktail of rare but discouraging data from the US, falling yields that failed to lift risk appetite across the global financial markets, even after better than expected technology earnings from the S&P 500 companies also failed to bring investors back on board. And then OpenAI shortly suggested last week also that the US could eventually warrant its $1 trillion debt before taking it back. I mean, it was a disaster. But this morning, things are looking calmer and the sky is clearer. The news that the US government shutdown could finally come to an end is actually lifting the market sentiment across the global financial markets after the US Senate put together the 60 votes that were needed to push the deal through its first stage. And it's only the opening act in what could still be a drawn-out political drama in the coming days, but investors around the world are still seizing any signs of progress to end the longest US government shutdown in the US government shutdown history and eventually feed investors with some data that they need so much to understand where the US economy stands at right now, where inflation and jobs are headed in the US, and what the Fed should do next in the light of the latest developments. Now, speaking of the Fed, some members are cautious regarding the weakening economy, and some of them appear to be giving some more weight to inflation than the weakening jobs market and the eventually weakening economic fundamentals. Last week's Challenger data, remember, printed the highest job losses in October in the US since 2003. And Friday's University of Michigan set of data hinted at, yes, deteriorating sentiment among people, gloomy expectations for the future, and a mixed inflation outlook with the one-year inflation expectations rising to 4.7%. So it's quite a close call for the Fed and its December rate decision, yet the secured overnight financing rate, called SOFR, just stumbled last week below the 4% level. So that's the lowest levels in 3 years. And that's not because the Fed decided to cut the interest rates or cut this rate, because SOFR isn't something that the Fed fixes directly, but it is rather a market-driven rate that reflects how much banks and investors out there charge each other for overnight cash secured by treasuries. And when there's plenty of liquidity out there, well, this rate, the SOFR rate, typically drops. And there is excess cash in the system right now. Remember, we were talking about that last week. There is nearly $7.5 trillion US dollars parked in the US money market funds, and the US bond auctions are running thinner lately, partly because the looming government shutdown in the US has complicated the issuance plan. So in other words, the Fed hasn't pulled the lever for December just yet, but the market has been reacting to all of the excess cash out there floating in the system. And the higher the liquidity, well, the better the appetite, and the lower SOFR rates could also help risk assets get a lift this week if the news flow doesn't get too crazy, of course, and there is no guarantee of that. But for now, the futures are hinting at an encouraging start to the week, and if the US government could come back eventually, it would be the cherry on top. The S&P 500 indeed rebounded around 2% since the rumors of a potential shutdown and broke last Friday. So there is more hope than fear this morning in the market. And add to that, Jensen Huang saying Saturday in TSMC's annual sports day that the business is very strong and it is growing month by month, stronger and stronger. Surprise, and that they need more chips from TSMC to meet this huge AI demand. So you got investors forgetting last week's drama on all of these news right now. TSMC is actually up more than 1% in Taiwan today. SoftBank in Japan jumps 2.5%, and the Korean SK Hynix is up by more than 5% this morning at the time I'm talking here. So Nasdaq futures are leading gains as well. Hopefully it lasts. In the FX space, the US dollar is steady this morning. The greenback had come under some renewed selling pressure last week, remember, after its failure to break the back of the 200-day moving average offers, but the end of the US shutdown should, in theory, give a positive jolt to the greenback and challenge some technical levels against majors. Among them, the euro dollar tested last week, remember, but found support near the minor 23.6% Fibonacci retracement level on the year-to-date rally, so that's near 114.80 level. Now, a move below this level will open the gate for a deeper downside correction, a deeper slide toward the 200-day moving average that stands near 113.55 level. Cable, on the other hand, dived but returned above the major 38.2% retracement on its own year-to-date rally, but the outlook here looks pretty bearish, to say the least, into the UK's autumn budget, while the dollar yen fell on Japanese finance ministers showing teeth last week to the Japanese yen bears, but the bears are back since 2 sessions and is also handing support to the US dollar this morning, along with a jump in US yields this morning that prints a 1% rise approximately across the yield curve. So all eyes will be on US politicians this week. Elsewhere, we don't have much US economic data on the schedule due to the US government shutdown, but a few earnings, including Nvidia-backed neo-cloud provider CoreWeave's, Cisco and Disney's, will be in focus, along with the 13F filings due Friday. So remember the latest news that Michael Burry, the Big Short's Michael Burry, has a massive position against Nvidia, and Palantir was among few factors last week that hit risk sentiment, but this morning is just still a little bit better due to Jensen Huang's pushing back. So many will be still looking for more evidence of lower exposure from investors, or maybe bets against the technology giants. Let's see what the 13F filings say, even though they don't mean that they are still active positions, but still. Elsewhere, inflation in China unexpectedly rose last month as the deflation of factory gate prices eased there. But unlike the Western world that doesn't need more inflation right now, inflationary news from China is good news, as they've been trying to boost consumption since years now, and production prices have been falling since 2 years and 10 months. So that's not a sign of healthy economic growth, mind you. The problem here is that the surprise jump in October could eventually be due to the Golden Week in China, a Golden Week holiday that lasted just one more day than usual and might have boosted inflation and buying activity in China, and that could be short-lived. Maybe the Chinese just need more vacation. But anyway, the US crude is better bid this morning, perhaps helped by encouraging inflation data from China. The US crude is above the $60 per barrel level. But the US crude remains under pressure within a well-defined negative trend that has been building since summer, also backed by OPEC's strategy of the moment of bringing more barrels back to the market. But also, the cartel had said lately that it's enough barrels for now, and announced to pause output increases between January and March next year. So this Wednesday's monthly oil report from there should give further hints regarding the cartel's production plans, faced with the rising global glut that is expected to reach 3 million barrels per day this quarter, according to IEA. So the question is, will OPEC opt to set a floor under the price declines right now by announcing the end of the supply restoration strategy, or let the prices decline more to seek a bigger market share? Affair to be followed. But this is all for this Monday. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.